Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are moving down today on the recent headlines coming out of Middle East. Recent headlines coming out of the Middle East. You can see the sharp drop in the last few minutes in Dow Jones, Nasdaq, S&P 500, and Russell 2000 across the board. Let's look at those headlines real quick before we move on. U.S. officials say Trump seriously considering strike on Iran, according to Axios. German's Chancellor Merz says U.S. to decide today whether to join the Iran conflict. Trump National Security Team to meet at 1 p.m. in a few minutes. We started early. We're going to end early today. Let's look at the markets real quick. Tesla is sticking out with a negative 3% drop. Everything else is pretty much mixed. Oil stocks are higher, and also T-Mobile is higher. All stocks are higher because of the rising gasoline prices coming out of the because of the news coming out of the Middle East. You can see oil prices ended May at $60 per barrel, and they're now moving towards $72. The highest they've seen was about $78 a few days ago. And I wouldn't be surprised with this news that's coming out of the Middle East now. I wouldn't be surprised if oil prices shoot up much higher. We're going to look at headlines coming along at the end of the live stream as well. But let's move on to Tesla for now. Insider interview with ex-Tesla manager reveals it could soon be game over for Elon Musk's Tesla. I don't think that there's anything he can do, this ex-manager says. So let's look into this interview. A former Tesla general manager has turned heads with a shocking new interview in which he laid the struggling EV maker's troubles squarely at the feet of Elon Musk. Once a 5-year Tesla employee and still a Tesla owner, Matthew Lebrot lost his job just days after the founding the group Tesla Employees Against Elon, according to Hard Reset Substack, which conducts an exclusive interview with Lebrot. Futurism shined additional light on the story, highlighting how Lebrot went as far as saying it's game over for Tesla under Musk. It's time to say the quiet part out loud, Lebrot originally wrote in an anonymous letter to other Tesla workers prior to being fired per Hard Reset. Let's be clear. We are not the problem. Our products are not the problem. Our engineering, service, and delivery teams are not the problem. The problem is demand. The problem is Elon. Can't blame him. Despite being passionate about the company's mission to deliver electric vehicles to the world, Lebrot said his concerns grew as Musk's public antics became more political and more controversial. Quote, we noticed return customers, shying away from us a little bit, Lebrot told the Hard Reset. And that's when I started to see the things he was putting on Twitter and political views he started to have. Lebrot became increasingly disillusioned as Musk's politics aligned him with the very people, industries, and the policies that were in direct opposition to Tesla's core mission as an electric vehicle company. The people that he was choosing to support were the exact people we had been fighting against while trying to accelerate sustainable energy, Lebrot told Hard Reset. Data backs Lebrot observations about customer enthusiasm with a huge drop in Tesla sales coinciding with an increase in Musk's public-facing political activism. Year-over-year sales figures in Europe, a key market for EVs, showed a staggering 49% drop in April per CNBC. The decline came in as overall EV sales increased by 34%. Globally, Tesla sales plunged 13% in the first quarter of 2025 as compared to the year prior to, according to Yahoo Finance. Tesla's slumping sales are bad news for consumers and the environment. In 2024, the Tesla Model Y outcompeted its Corolla to become the world's #1 selling vehicle, according to Statista. Now, that's not the only reason, right? Because we also have cheaper vehicles coming to market as well. Any questions, comments, please leave below the video in the chat section on X or live chat on YouTube, and I will answer all questions. We have about 20 minutes to go over this today. Nissan's another cheap vehicle that's coming to market. There are two vehicles I'm going to highlight today. We talked about the YU7 yesterday in previous episodes, but that's not the only problem. Tesla isn't having sales problems only in China. It's also having it in Europe. It's also having it in US as well. Nissan's all-new 2026 Leaf EV comes at a critical time for the automaker. Nissan is targeting 70% conquest rate for the Leaf, meaning Tesla in its crosshairs. But will customers take a chance on the struggling brand? The one thing about these vehicles is that they're very cheap, as opposed to previous years when Tesla was able to offer long range for lower prices. That is no longer the case, really, anywhere in the world. This car is now it's going to be in the very low. We have not released final price on the vehicle, but fair to assume early on that it will be in the very low 30,000s, with higher trims reaching $40,000, said a senior vice president and chief planning officer for Nissan Americas. And it's a good-looking car. It's a bit more than the current Leaf, which starts at $28,000, $140, but believes that what's important is maintain a similar monthly payment, a metric Nissan will try to maintain, goes on sale. This is the important part. 303-mile range for 75 kilowatt-hour battery pack, huge jump from the 212-mile range. So that's almost a 100-mile range. It starts with 3. I think that's a psychological thing for some customers. So I think this is going to be a competitive vehicle. Now let's look at this one. I think this one is really impressive. Kia EV4 redefines the electric sedan experience with class-leading innovation, etc. This is a Kia press release, so ignore the fluff a little bit. But look at this number. WLTP estimated range of up to 630 kilometers. Okay. The EPA range is going to be about 20% less. But you're still looking at a 350 to maybe 390 miles of range on the EPA. And how much is this vehicle? 2.3 CD. Let me find the price for you. I just remember being very low. Let me get you the exact price. And you can pause the video if you want to look at the charging rate and other specs. Fast charging, 29 minutes, 10 to 80%. So that's manageable. You can see the battery specs here, power 150 kilowatts. You can see the range on WLTP, just reduce it by 20% for EPA range. Okay, I don't have the price here. Sorry about that. We'll get back to you. But the thing is, I think it was very, very low again. I think it was somewhere around $30,000 again. So this is not just in China, it's also the rest of the world and in the US as well, across Europe, also other Asian markets outside of China. Now, the coming competition is not just a problem. The overall EV growth, as we discussed before, hybrids are becoming the choice for most customers. Overall EV growth seems to have stalled as well. Yesterday in an interview, Ford CEO pointed out that in the last 3 years in the US, the EV revenue has not grown at all. So even though units have grown at a decelerating rate, prices have plunged. So EV revenue growth actually has been zero to negative in some parts of the world. Differences in, so it says Shell poll, it says differences in driver attitudes to EV adoption show it's too early to pull the plug on sport. The survey highlights a significant increase in confidence among existing EV drivers. 6 in 10 EV drivers globally agree that they were less than a year ago about running out of charge. Nearly 3/4 say that the options available to public charging points have improved. However, research also found appetite for EVs among ICE drivers is declining. So this is a material change from previous years when demand for EVs were projected to grow, I think by Elon, 50% per year. For as far as I can see, we used to talk about 20 million per year Tesla production figures, but it seems to have really stalled in before reaching mass market. The research also found appetite for EVs among ICE drivers is declining. In the US, the interest is marginally lower, 31% in 2025 versus 34% in 2024, while in Europe, it has decreased more substantially, 41% in 2025 versus 48% in 2024. All right. Now, Elon is also busy with his other companies, of course, is now again starting to raise money, trying to raise money for XAI, $4.3 billion equity raise. Elon Musk, chief executive officer at Tesla, walks, etc. Let me see. All right. The one thing I want to point out on this one is that I think increasingly companies, and especially Elon's companies, are going to have a tough time raising billions of dollars at a time. And I think it was only a few months ago that XAI raised money. So they come to the market in a very short period of time for such a major amount when ChatGPT is clearly demolishing Grok in terms of user adoption. So I'm not sure what's going to happen here, but I think some things are changing. The free money is over. What the business world has to like and not like in the Senate version of Trump's big, beautiful bill. Let's quickly read through this. Actually, I'm going to read a summary on this one because we're running out of time. The Senate Finance Committee released a revised version of President Trump's tax bill, incorporating changes from the House version. While the bill includes permanent corporate tax deductions, it retains a revenge tax on foreign businesses, which may deter foreign investment. The Senate's version also includes significant cuts to Medicaid and a reduction in the state and local tax deductions, sparking opposition from various Republican senators. So the back and forth is going forward. It's going to last a few more months. One thing I want to kind of point out is today we got the retail sales numbers for May. It was much lower than expected. So let's dig into the details a little bit. I think there's some sort of issue going around in Q2, especially on the macro front. Retail sales slide in May on lower gas auto sales amid tariff uncertainty. Retail sales in May fell in May, dragged down by declines in gas and auto purchases during the second month that a wide array of President Trump's tariffs were in effect. Headline retail sales declined 0.9% in May, surpassing economic expectations for a 0.6% decline month to month. Now, one thing I should point out is that in April and May, oil prices were very low. They were about $60 per barrel. Right after the April 2 Liberation Day, oil prices plunged. That lasted for about 2 months. Okay. Now in June, they're up about 20-30%. And gasoline prices will continue to rise, most likely, unless if this Middle East geopolitical concerns just disappear overnight, which I don't think is going to happen, right? So if people have to spend more money on gasoline, they're going to have less money to spend on other things. So I think June retail sales, excluding gasoline sales, may be even worse than what we're seeing in this article. The weakness in retail sales in May was mostly due to temporary drags from the end of tariff front-running and the unseasonable wet weather in the east of the country. So should the reverse in June, this person disagrees with me. Capital Economics, North American economist Bradley Saunders wrote in a research note Tuesday morning. We'll see who's right. A 2% decline in gasoline sales, 3.5% slide in auto purchases, and 2.7% decline in building materials drove the May headline number lower. There was some positive news in the release. The control group in the Thursday's release, which excludes several volatile categories and factors into the GDP reading for the quarter, rose 0.4%. That compares with a 0.1% decrease seen in April. Economists expected 0.3%. The largest increase in May was seen in miscellaneous store retailers, which sales rose 2.9%. May sales, excluding auto and gas, declined 0.1%. Economists had expected 0.2% rise. So that's a 0.4% difference. The data comes as investors have been closely watching how the implementation of President Trump's tariffs will impact data. The survey month encapsulated Trump's recent tariff rollbacks, including a 90-day tariff pause between US and China. Morgan Stanley chief economist Michael Gapon wrote in a note to clients on Tuesday that May's retail sales affirms their view that U.S. consumer remains healthy and willing to spend for now. We have not yet seen clear impacts of tariffs and prices, Gapon said. We continue to believe we first need to see the price impact that would impact real spending in the third quarter. I don't know. I think these are a little too optimistic. JetBlue says to cut flights as economic uncertainty led to softened travel demand. JetBlue is sounding the alarm on weakening consumer travel demand. In an internal memo obtained by Yahoo Finance, CEO told employees that it is unlikely that it will reach break-even operating margin this year and will need to cut flights and change routes. We're hopeful. So that tells me layoffs are coming. We're hopeful demand and bookings will rebound, but even a recovery won't fully offset the ground we've lost this year, and our path back to profitability will take longer than we had hoped. Adding, we're still relying on borrowed cash to keep the airline running. I mean, he's setting the stage for layoffs, basically. As part of the plan to rein in spending and reserve cash, the company plans to reduce flights, particularly on Tuesdays and Wednesdays, to cut underperforming routes and place them with other destinations that have profit potential, and pause upgrades to its Airbus A320 jet. Job cuts among leadership may also be underway. There you go. CEO said the company is assessing the size and the scope of our leadership team and has identified ways to combine and restructure certain roles for greater efficiency at the leadership level. Stock down 4% on the performance airline peers. All right. We don't have time for this one. Thank you. Let me see any questions. No questions. Thank you very much, everybody. And I will chat with you all next time. Take care.